Tesla has earnings tonight, and at the same time, the market just turned green. What does that mean for us? Well, you guys know that I'm a big investor in Tesla, but that doesn't mean you should go out and buy it right away. But in this video, I'm going to go through the charts, and I'm going to also talk to you about the importance of owning something when the market's green. We'll see if we can put all that stuff together. Hey everybody, Mark Yegge here from the Cash Flow Machine. So glad you're with us. And we've got a big day coming up today. Tesla earnings are coming up tonight. And you know me, the rule is we don't take risk going into earnings. That being said, I'm going to show you how you can protect yourself. I'm going to show you how you can read the charts. I'm going to show you why the market's green, all kinds of stuff. So let's get rolling. Let's take a look at some charts here. And we'll start with, first of all, the market. So the market just turned green yesterday, and you can see that it's starting to make some recent highs just over the last, it made a nice little dip here over the last 3 weeks, and it went down, hit a low, and you can see all of those green bars. There's like 7 out of 10 of those bars are green, and 2 of them are red. That's okay. We've got momentum in our favor. We got the parabolic in our favor. We got the market going up over its moving averages. So it's green. And we have a rule in the cash flow machine, and that is when the market turns green, you got to buy something. Now, I will say this. When the market turns green doesn't mean that we are in what I call a short-term bull market, or we're in a primary trend up. It doesn't mean that, right? But it's never happened where we've had a bull market or a primary trend up where the market didn't turn green, okay? That's kind of like saying, you know what? All of the people that have won a gold medal in the 100-meter dash in the Olympics have worn shoes. But that doesn't mean that if you wear shoes, you're going to win the 100-meter dash. Does that make sense? So you've got to think about it in terms of probabilities, right? So we've got a green market. That means you should buy something, even though it doesn't feel like it because there's lots of negative news. But buying something is something that is a good habit to get into, and that's why we make it a rule in our system. There's a lot more rules in our system than just that. So you've got to learn why we do all the different rules. But that's one of the big rules that we have. And so the market's green. Now, let's turn our attention to Tesla. Now, Tesla has earnings coming out tonight. And in the cash flow machine, what we try to do is limit the potential for losses. And we've got these 4 days a year of earnings that any company has. And those are the 4 days that we really can kind of not predict, but we can protect. And so we want to protect our account first and foremost going into numbers when there's a chance that we can protect it. Like if the stock goes down a lot and Tesla has this chance of doing that because it moves up and down, you want to be able to protect your account. We don't want to necessarily make a ton of money on a day like today. There are tons of people out there making a ton of money or trying to, and I'll show you that in a second. But let's take a look at this little news release, and that is analysts expect the company to disclose revenue of $24.3 billion for the quarter and earnings per share of 75 cents. Automotive gross margin is expected to fall to 17.5% from 18.1% in Q2 and 19% in Q1. So there are falling margins. Should that be scary? I don't know, I guess. But the company has very little debt, very little, and it's cheap debt. And it's going against, I'm not going to go into all this stuff, but it's going against the big 3 automakers, right? Ford, GM, and Chrysler, Stellantis, or whatever the name of their company is now. And those big 3 are all on strike, and Tesla's not. So Tesla's just going to keep pumping out cars, and those 3 who want a 40% raise over the next several years are going to not be pumping out cars. To me, that's a huge advantage for Tesla. I don't know why it's not reflected in the stock, but I don't understand the stock market sometimes. I just try to play the probabilities. Anyway, so they've had eroding profit margins. Why? Because their strategy is to get as many Teslas out into the market as possible. Why are they doing that? Well, a lot of revenue streams that are unseen today come from the fact that Tesla has a larger and growing fleet. And one of those things is called full self-driving, or FSD. And FSD basically means that you can take your hands off the wheel and the car will drive you wherever you want. You're using GPS, stopping for people walking in front of the car, or people swerving in front of you, things like that. And it's an amazing technology. And the more Teslas that get out on the road, the better the data gets, so that the better the FSD gets and the more data they get. And then they can start selling FSD, which is basically a switch that they turn on in the car electronically. And it brings in anywhere from $2,400 if they license it a year to $15,000 if you buy FSD. That's like buying another little tiny car, right? And it's all profit. And so Tesla's job is to get as many cars out there as it possibly can. And I think it's executing on that strategy. It's growing its sales. It's growing its units produced. Okay, maybe there's some slowdowns in the units produced for sure, but they're still growing and the other guys are all on strike. I don't know. To me, like, this stock should be going up. Let's go through the next part. So you're seeing margin erosion go into place. So 17.5% from 18 and then 19 before. So they were shooting for a 20% margin. And I think that's kind of out the window as people are they're being a little bit more price sensitive to buying Tesla cars. Okay, so they're selling more. Tesla already reported that it produced 488 vehicles and delivered 435,000 vehicles during Q3. So it had a slight shortfall in its delivery expectations. Okay, so it delivered 5,000 fewer vehicles. To me, that's okay, not a biggie, right? Maybe I'm just an optimist, but a company that keeps growing its sales, keeps growing market share. They're the number one selling car in the United States now. And I think when the Cybertruck is released, they're going to threaten Ford's F-150 as the number one selling truck. There's already 2 million in backlog, but I don't want to get all the way into what I think on Tesla, because there's so many things that you could talk about with Tesla that we could spend an hour here. I just want to tell you that I think there's a lot of good stuff under the surface, and these quarterly results, while they're creating volatility for the stock, can be a little bit misleading. So keep your eye on the big picture. Anyway, we don't want to take chances, and that's what's going on. Okay, so that's okay. I want to show you the weekly chart on Tesla. Now, if you see this top line that I've drawn, it's kind of a trend line where I've tried to encompass as many of the little peaks as I could here. And you can see there's a slight trend down. That's a weekly chart, so this has happened over many years right now. And that's a downtrending stock. Could that be in jeopardy as a downtrend? I don't know. I think it might be. And I'll talk to you about that in a second. You can see there's a short line squeezing up right there, right? And that's kind of shows that the stock, even on a shorter basis, is trending a little bit higher. That's creating what's called a pennant formation. And it's basically squeezing the stock into this little funnel. Can you see that funnel there? And the stock will do one or the other things at these little critical funnel points. And it's either going to go up, which is what I think it's going to do, or it's going to start going down. Now, if it goes down, it wants to go back to that $100 level down you see at that bottom line. And if it goes up, I think it squeezes up. It goes to $299, which is its recent high, and then it may go to $315 or something like that, which is its next recent high, and then it's going to possibly go to $340, and then eventually get up to $400, which is its high from a couple of years ago. And the sales of the company are way more than they were a couple of years ago. So it's amazing to me that the stock is still down. So there's a little bit of pricing pressure on the stock and PE pressure and that kind of thing. But that's the weekly. And you can see there's a little cup and handle right there, very small cup and handle. And the company wants to come out. I think the top of the cup and handle is around 279. That's the number that if it hits 279 and it does it on volume, the stock goes way up, right? And if it goes to 279 on volume, we've got a breakout in play. And that breakout's going to go and feel some resistance around the 299 level. Let's take a look at the daily. The daily chart kind of zooms in a bit more and it'll show you some more here. So let's look here. There is that big line, but now since it's zoomed in, you can't see the whole picture. But anyway, there's the big line up top. And now we've got a little short line squeezing it toward the bottom. And we have an even shorter term little squeeze going on there as well. Additionally, you can see the 50-day moving average is now is underneath the stock price. And that is telling us that the market makers and the big money Wall Street companies are supporting the stock. And they're supporting it above the 50-day moving average. Good things happen above the 50-day moving average. Not so good things happen below it. So we've got to keep an eye on that. But it's above its 200-day moving average. It's above its 50, and it's going through this little pennant squeeze. And to me, that is all bullish. Now, a lot of it depends short term on what happens tonight at earnings. And if earnings are crappy or the expectations are crappy, or there's a lot of reasons, margins, whatever, deliveries, then the stock is going to feel some short-term pressure. But I think long-term, we have a downtrend that's kind of reversing. We have an uptrend that it's building, and we have sales and deliveries that are going forward against a backdrop of their competitors are on strike. So to me, a lot of good things are happening. I think it's probably more good things happening than bad things, but you've got to be careful. Now, I always say you've got to be careful going into numbers, and I mean it, right? You can't just be taking chances. That's what the gamblers do. We don't want you to be a gambler, at least our clients. We want our customers in the cash flow machine to not be gamblers. So what do we do? Well, we buy the stock and we sell the call against it and we make the income. That's really what we do. We don't care if the stock goes up or down, unfortunately. We don't take that chance, right? That's for the gamblers. What we do is we use the stock to create income. So we buy the stock, we sell the call to a gambler, right? Now take a look at this chart in front of you. These are the options that expire in 2 days. And the stock right now is at about 254. Now market's closed, so all this could change, but I'm trying to do an analysis here while the market's closed so the numbers aren't moving everywhere. But the stock is closed around 255. It's down 50 cents pre-market. So it's about 254.35. Let's just call it 255, close to the money roughly. Okay, so 50 cents or so. Okay, look at that column that says time value. That's how much time value there is for the next 2 days, which basically means a buyer of that option is going to spend $7.25 and hope that the stock is above 255. But it's not just 255 that he's hoping. He's hoping it goes to 262.25, because if it has to go over 262.25, which is the 255 plus the 725. If he gets that to happen, then he breaks even at 262.25. So he's betting $7.25 that the stock is going to go above 262.50 or 262.25. Make sense? So he's gambling. This option expires in 2 days. If the stock goes down, he loses his whole 725 or almost all of it, right? And so as a seller, we get to keep it no matter what. All we have to do is promise that they can take our stock away from us. That only affects us if the stock goes above 255. If the stock goes below 255, we get to keep their $7.25. Thank you very much. And that's our income for 2 days, $7.25 on that stock. Okay, just from the option. But what we want to do is, people in the cash flow machine have already bought the stock and sold the call. And now what we want to do is we want to protect going into earnings. So how do we do that? We use something called the implied move. And here's the way I calculate the implied move. And a lot of people calculate it differently. I take the at the money call and the at the money put, I add them together and I multiply by 0.85 or something like that, right? And so to me, if you go to the 255s and you say, well, the at the money call is 745, add that to the at the money put, which is 735, you get about, just under $15, right? So if you multiply $15 by 0.85, you come up with around, let's call it $13. So that's my number. So I want to sell deep enough so that I have a $13 move protected. I'm going to sell down $13 from the 255 level to about the 242s. Well, there are no 242s. There are 242.50s. So those are probably the ones I'm going to do. So I'm going to sell those calls. I'm going to get $15 and roughly 15 cents for them. Okay, that's my protection. That means the stock can go down $15 and I still haven't lost any money. Okay, $2.80 of that is what we call the juice in the cash flow machine. That's what we're after, is just the juice. But really, this is the night we don't care about the juice that much. We really want to protect ourselves and maybe get a little bit of juice. So we're going to do the 242.50s. That's how we protect ourselves using the implied move strategy. Now, we have a few others that we teach as well, but I like this implied move strategy on a company like Tesla. Now, what does that mean? Well, the stock is at 255, and we're going to be getting $15.15 selling the call. Well, that means the stock has to go from 255 down to 240 before we start to lose money. right? It's got to go down $15. The $15 we just got in income. It's not all income. The 280 is what we're after. But we do have the protection of it going all the way down to the 240. I like that. I like having that kind of protection going down into numbers tonight. So let's wrap up by saying, look, the market is green. Tesla, I believe, is on a short-term uptrend, a longer-term downtrend that is reversing, in my opinion. And we'll see what happens with numbers tonight. I want you to be careful. I want you to understand that this is all about learning. I'm just trying to teach you some of the things that we do in our program so that you can protect yourself and you can see kind of what we look at and kind of what I look at. I'm a little bit of a geek when it comes to charts. So I try to read the tea leaves in the charts. The whole system is based around not certainties, not whether Mark knows whether Tesla's going up or down, because I have no idea. I can just play the probabilities. I try to build the biggest story so that I like being in the stock that I'm in, and I like Tesla, and I like what they're doing. I like the company's revenue prospects, and I like their sales prospects, and I like their earnings prospects over time. But I don't know what's going to happen tonight. The people that sit around that boardroom table are the only ones that really know, and probably a few insiders, but that's besides the point. And so what ends up happening tonight is totally up to chance, but I can get those probabilities on our side by saying, okay, I'm going to buy the stock. I love the stock. It's Tesla. It's the right stock. Is it in the right market? Well, we got a green market yesterday. So yeah, it's in the right market. Is it at the right spot on the chart? Well, it's pretty close to the right spot on the chart, but I don't want to buy it today if I'm not in it. I already own it. So I'm just going to protect myself. And then I'm going to squeeze the juice. Well, there's not much juice this week. There's only $2.80 for the next 2 days of juice, but I'm going to protect myself going into these numbers. And those numbers could be surprising to the upside, could be surprising to the downside. Who knows? Bottom line is we want to just protect ourselves. I hope that was a good explanation of what we're trying to do. If you're interested in what we're doing here, I'm trying to get this to you before the market so you can kind of get your feet on the ground before earnings tonight. And if you like what we do, hit the like button, please. That helps the algorithm expose this to a few more people and makes me excited to make more of these. Hit the subscribe to my channel. That'd be awesome. And hit the notification bell. And that way you can get these things as soon as they come out. If you're interested a little bit more in what we do at the Cash Flow Machine, we try to shoot for making 2 to 4% a month in income. That's really our goal. And 2 to 4% doesn't sound like a lot. I know. But it adds up. Right? 2 to 4% is 24 to 48% a year. And there aren't a lot of people that get that. Now, we don't always get that either. Like Tesla's been a rough ride, but we've been creating the income. And, it's like owning a house. You buy it, you rent it out to somebody. You don't look at the value on Zillow every single day, right? But you collect the income every month from your tenant. And that's kind of what we do in the Cash Flow Machine. It's an income strategy. It's not a capital gain strategy. So if you're looking to buy Tesla, which is a great company, and it's probably going to go way higher. I think it's going to go way, way higher over time. Well, then you buy it and you hold it and you hope that everything that Elon Musk does is great, which it's probably going to be. But if it's not, you're just sitting there and waiting. What we do is we don't sit around and wait. We collect the income from the gambler. Anyway, enough today. Thanks for sticking with me through all this stuff. Good luck on earnings tonight. If you're in Tesla, just make sure you protect yourself so you don't lose money. See you on the next video. Take care.